Hello and welcome to this week's episode for Conservative ETF Investor Stock Market Update for February 8th, 2025. My name is Ken Cogliano, Senior Market Analyst for Conservative ETF Investor. This week, we do have a yellow for the stock market strength color signal. Here are all the topics that we are going to discuss for this week's video. This is an intra-month video, so I'm going to try to keep it as short as possible. As of today, February 8th, there is a 92% probability that the Fed Chair, Jerome Powell, is going to keep the current rates where they're at right now on the next announcement, which is on March 19th, 2025. It's about, 5 weeks away from now. All the major indexes, the S&P 500, the NASDAQ 100, and the Russell 2000 small caps, all closed about flat for the entire week. Last week, I did send out one trade alert to our subscribers for our SPY model portfolio. I do manage 4 model portfolios, and you can see them right here, which are the S&P 500, NASDAQ 100, small caps, and I do have a small account which only has a value of about $3,500 that we're trying to build up. In that particular account, I can purchase any products that are available on the Charles Schwab platform. So here is the alert that I did send out on Monday, February 3rd. So it was getting close towards the end of the trading day. There was only 10 minutes left, and I said I didn't have enough time to articulate a proper email, but we're going to take steps to protect the portfolio because on that time, things were heading south. And so I put in this trade alert right here. So we were going to sell to open 2 basically in the money covered calls with a strike of 575. Now the market did move up after that. So they took our shares away. So the option got exercised. And so our portfolio right now is in cash. All right, so here is a 10-day candlestick chart for last week and the week before. Now, here on February 3rd, which was on Monday, towards the end of the trading day, that's when I saw that things were just heading south, and I was afraid we were going to have more downward action on the market, and I wanted to protect the portfolio's profits, so I didn't want to keep heading south. So at that point in time, that's when I took on that in the money covered call that I told you about with a strike way in the money, so far in the money that this chart doesn't even show it because this goes down to 591 and I went down to 575. So it was way down there. So at that point in time, we ended up doing the in the money covered call. Now, we did get paid $23.67 per share. And for the 200 shares, that's $4,733. But then the market went north. And only until Friday, things were actually looking pretty good until Friday. On Friday, that's when things headed south. Now, this candle right here, hold on, let me clean this up. This candle right here is not yesterday's Friday, but 1 week ago's Friday. And then on the Monday, it gapped down. Now, is that going to happen again? It's a little unclear, but this particular candle, just yesterday's Friday, does not look good. It looks like it could absolutely be a gap down on Monday. So we'll see how that plays out on Monday. Okay, here are the trades that we've made in our model SPY portfolio for 2025. Now you can see down here we are currently in cash, 100% in cash. We started the year off with $130,000. We're up right now to $132,000 or 1.7%. Now our whole goal here is to beat the buy and hold investor. Their portfolio is up 2.52% year to date. So they are beating us. Not by much, not even 1 full percentage point, but let's recognize that where we're at, to always be on our toes and know what's going on. If you want to learn more about me and sign up for my real-time trade alerts, you can head over to this website right here. It will be a link down in the description down below. And I hope you get some valuable information out of this video. I want you to smash that like button down, subscribe to my channel, and ring that bell. All right, now here is an equity curve against our model portfolio in blue against the buy and hold investor in pink. So you can see how well the two portfolios fare. Now we're going to compare ourselves for the entire year of 2025. We're just into the second month here. So this is so far it's turning out to be somewhat of a tricky year for investing, but our whole goal is for at the end of the year for us to be above and have a better rate of return than the buy and hold investor. In 2024, we were able to have a return on our SPY portfolio of 37.29% with this strategy. The buy and hold investor ended the year at 23.3. So we smoked them by 14 percentage points for 2024. All right, this is a weekly candlestick 1-year duration chart for the S&P 500. And here I can kind of see, let me just get a different drawing tool here. Let's go with this one. You can kind of see how things come up, come down, come up, come down, come up. Came in a little bit there, came up, came in a little bit right there. And now we're kind of in this rising phase. If this is a low right there, let me delete that. So we're trying to get an idea of what is the future? Where does this future stock market take us? Now, I have a low established there and some lows established here and here. And you can see this valid trend line that I've drawn in based off of all that information taking us to right there. This is the last week's action right here. There is also a line right there, which is taking into account that high. It's for 3 weeks in a row, as we try to penetrate and break and stay above that high right there, we're not able to do it. We keep getting shot down. Now, we were in this wedge pattern coming down this way, which you would think would be a bullish wedge formation, or bull flag formation, I should say, because we were in this rising pattern. We came down a little bit and then we broke out above it on this candle right there. But we've just gone sideways ever since. So we're not seeing that follow through action. So, but right now we're still above this line. We are below this line. So we're stuck in this trading range between here and, well, right there, really. That's the trading range right there. And until we break out of that trading range, we're in that trading range. Now, looking at it from the MACD below its signal line looks like it's traveling somewhat south. The slow stochastics is above its signal line, but it's traveling parallel. So I've got down here a bullish symbol to represent that, generally speaking, this chart is bullish from what you're seeing at it right now. All right, now we're looking at a daily candlestick chart with a 6-month time duration, cycle brackets down here at the bottom. This low representing that low, this low representing that low, this low representing that low. This low, I say, is yet to be determined. I don't think it's that low, although it could be. Not guaranteed yet, but it seems like that would be a little premature. It seems more likely that this low here has not been established yet. So from our current trading, oh, and by the way, you can see the trend line here and the trend line here. So we've got this wedge formation going on here. We can't seem, we're not breaking out above it. And as of Friday, with a pretty much higher than normal volume day, we did crash down beneath it. We were not able to break that resistance. Down here at the MACD, notice the histogram, how it is losing energy, traveling south. Look over here in the thumbnail for the MACD, how it is up, coming down. It started to go positive, but not by much, and looks like it is just one tick away from breaking below that signal line. Slow stochastics is already below 80, already has a topping formation in right there, and sure looks like it's heading down to 20. So you notice I've got a bear symbol right there? That's because this chart is looking more bearish than bullish to me. So let's assume that bearishness is what is in the future for the S&P 500. So where does that take us? It takes us to at least this line here, but that's not much. That only takes us to just below 600. Well, heck, we're at 677 right now. So that's really not a lot. But if we break that line and we enter into this massive white space here, well, then let's talk about our next levels. The next real level of support is going to be here at 590. Then I put down that support level there at about 583. And then that support level there at about 568. So we've got a few different levels of support that we can fall into. It seems likely that we're going to at least fall into the 590 range within the next 2 weeks. That's my speculation on what I'm seeing in this chart right now. All right, now we're looking at the VIX Volatility Fear Index. We are at, what's the number? 16.54. We're in the low range. We are bullish. So you got the bull symbol right there. Look at the MACD. MACD is kind of in this congested range right here. It looks like it's going to be heading more south than north. Slow stochastics below its signal line looks like it's traveling south. Again, from the VIX's standpoint, this is bullish. We should be long the S&P 500 with this information. Now we are looking at the New York Stock Exchange Advance Decline Issues. That is going to be the chart that is in black, red and black, okay? These green lines here, they represent Bollinger Bands. The blue line represents the S&P 500. Now, generally speaking, the article that you're tracking bounces in between the Bollinger Bands. Here's the top of the Bollinger Band, and we're kind of towards the top end of the Bollinger Bands. So if you're at the top, it's, bullish that you went up there. And so far it's been maintaining. Let me get rid of some of these lines. So that so far is somewhat bullish. But the fact that you're starting to come down there and look at the MACD, this is on the NYSE Advanced Decline line, okay? Notice how you've reached a topping pattern here. Histogram clearly heading south. Slow stochastics down here at the bottom below its signal line looks like it's heading south. So I'm seeing a little bit of both bullishness and bearishness in this chart. If anything, I'd even actually lean more towards bearishness. Look at the RSI strength here at the top. Notice how it's curled down and it's traveling, it's pointing south. So it could be heading right towards that 30 line. Maybe it is. And maybe we are going to experience that pullback of a few more percentage points in the S&P 500 before things settle out. All right, over here, we're looking at TNX, 10-year U.S. Treasury yields. This is a 1-year duration candlestick chart. In blue, which is this blue right there, that's the S&P 500. In black, which is that line right there, that's the ETF, which is TLT, 20-year bonds. Now, what is this chart doing? Look at the MACD, how the MACD is below its zero line, and it sure looks like it's bottoming and picking up energy to travel north. The slow stochastics, notice how you made a higher high, a higher low here compared to that low right there. It's above its signal line, and it sure looks like it's traveling north. Well, if TNX is traveling north, that's going to put pressure under the S&P 500. So I've got a bearish symbol, but I also have down here the bears and the bulls symbol to represent neutrality here. Because if we kind of stay in this range, the market has moved up with TNX staying in this range. But if TNX does rise from its current level, that's going to absolutely be bearish for the S&P 500. All right, here is Mr. Warren Buffett, the Oracle of Omaha, incredible investor. And here is CNN Business Fear and Greed Index. We are currently in fear. We want to compare to 1 week ago. 1 week ago, we were at 40. We are currently at 39. So we're in this level. We haven't moved much according to what CNN Business Fear and Greed is trying to tell us. We are in fear, which generally means that we want to be more bullish than bearish, but we're pretty close to neutral here. So I've got down here the symbol of the bears and the bulls, because you can still fall from where you're currently at very easily. So we'll see how this plays out. All right, now we are going to look at seasonality for SPY. We're currently in the month of February. 40% probability going back 5 years of data that you're going to close higher than when you opened the month. For the current month, these are monthly candlesticks for SPY, we are down 0.17% for the month. So with that said, we've already accomplished what the seasonality is telling us. There's a 40% probability you're going to close higher, 60% probability you're going to close lower. We already have closed lower. So we've already accomplished that goal. So I've got down here, from a seasonality basis, this is really not giving us any information. It's neutral. All right, now we are on the Think or Swim platform, and this is a 3-year weekly candlestick chart for SPY with standard deviations +2, -2 in gold, +1, -1 in pink, halfway regression line in the dashed green. All right, so I do have an alert that's going to be sent to me at 590.68. That looks like it's taking into account last week's low that was established during the week. So we'll see if we continue to fall from there. I do have this valid trend line right here. We'll see if that line there is going to get taken out. It seems reasonable that we're actually heading towards that line right now. This here is the MACD on the bottom, traveling south. Slow stochastics is above its signal line, so that's actually looks more bullish than bearish on the slow stochastics. Let's switch over. What we're going to do is we're going to look at 1 year daily. Let's change our brackets to 1 year daily right here. Let's see what this is going to tell us. Now, with this information here and with my major and minor cycle brackets at the bottom, you can kind of see that this particular major cycle with the 3 in-between cycles or the 3 minor cycles is kind of laid out pretty easily in this cycle. Now, on this cycle here, this minor cycle looks like that one, and this one way over here, which is kind of funny the way it's spread out over there. That means that this low could be that low. If that's true, and you have a major and a minor cycle, the beginning phases of the cycle, you have a lot of up energy that should carry this up, and it should break this line. Let me get rid of this, all this. It should break that line right there. If these cycles and my prediction about that one being the cycle low right there is actually true, well, then we should have the energy to break up above it. We may not have that energy, and if we don't, and we start crashing down, and that's coming off of the heels of this negative cycle here. So it is very possible that this market does not have the energy to continue to move forward. And now is the breaking point of that market. So I've got an alert that's going to be picking me up right there if we do pick that low up right there. If not, the next low is going to be right there at about 575. But let's get through this first one first, which is 590.68. Let's see if that one holds or not. All right, now we're looking at an Excel spreadsheet that I created to get in health of different asset classes and the 11 S&P 500 sectors. And there's a score that gets accumulated here, and then we have a total score that comes out over here. So for various asset classes, we're at 57 this week. Last week, we're at 33. So we did go from red to yellow. So that's bullish. That's definitely more bullish. We're not in the green zone yet, but we're definitely getting closer. We need a number that's 61 or greater for this color to be green, for our red, yellow, green indicator to go green. Now, on the 11 S&P 500 sectors, we were at 38. We did go to 41 this week. We're still in the yellow, but that's not a lot of improvement from 38 to 41. So you definitely see some signs that you need to be cautionary in your investing moving forward, at least using this data. All right, that is going to take us to the conclusion of this video. As of February 8th, 2025, the market summation, according to me, Ken Cogliano, Senior Market Analyst for Conservative ETF Investor. This market can go in either direction. We have weakness as noted by the yellow on the strength signal indicator right there. Our model SPY portfolio went to cash on Friday. I showed you those trades earlier in this video. And we will watch next week's action to determine next steps. Because right now, I don't want to just go in and start buying on Monday. Certainly, the market doesn't look like I need to be buying anything on Monday. Monday could be a gap down day. So let's see what the market has in store for us. If the market does pull back a few percentage points, overall, I will be buying long, because overall, I do think that right now, there's not enough bearish information in the charts to tell me that we need to be shorting this market. I'm really just looking for an entry point at this point in time. Things are still bullish. Generally speaking, overall, things are still bullish. I think we're in a pullback right now in a bull market. That's what I personally think. Even though I say these things, the market is an 800-pound gorilla, and this 800-pound gorilla is going to do whatever it wants to do whenever it wants to do it. We did have a fantastic year in 2024, up 37%. If you want to learn more about me and you want to subscribe to my real-time trade alerts, I want you to head over to my website. There will be a link for it in the description down below. Here is Mr. Warren Buffett, and his number one rule for investing is never lose money, and he often adds rule number 2 is never forget rule number 1. This guy is fantastic. All right. With that said, I want you to smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.